okay, what happened is that okay, in the financial reporting, when we audit financial statement. Of course, we have other kind of assurance services, but in most cases, we are talking about auditing of the financial statement. So when we audit financial statement, the objective is actually to report the financial statement is true and fair. Okay, what this means true? True means the figures is actually reflect the accurate figures, okay, which is to comply with all the audit objective lah. Okay, the accuracy, completeness, valuation, etc. and so on. Okay, fair means it is actually reflect the proper presentation as what being required by the respective financial reporting standard. Okay. So if you have actually looked at the conceptual framework of the accounting standard, it is actually emphasized on the because when you want to record a certain transaction, okay, when you want to record something inside your SOCI or inside your financial positions, okay, most of the time you actually follow the four main concepts, which is number one, how you want to recognize, okay, how you want to recognize if you whether you want to recognize it as an asset or you want to recognize it as an expenses, okay, or you want to recognize it as a liability or what. Okay, because when you have transactions, you can actually need to understand the nature of the transactions. Is it which category? Okay, so which classification of the item on the financial statement. So once you recognize, okay, you already know, okay, this is actually should be categorized as an asset. So once you know it is an asset, of course, the next thing is that you want to know the value, the measurement of the values of that particular assets. Okay, how you want to measure? You want to measure using historical cost, or you are actually using fair value or market value, or perhaps net realizable value. Okay, so what is the best value that we want to use in order to record? So here is actually, if you notice, so all this is actually accountant has to make a judgment. Okay, accountant has to make a judgment, all right, based on the principles that have been given in the financial reporting standards. Okay, so based on your understanding, what can you interpret? Okay, because it's not like, what's this? Ada lagi ke tak masuk? Okay, it's not like what is this refers to. Yes, I thought so. Okay, so you have to make judgment. Okay, you have to make your own judgment because it's not like straightforward in the financial reporting standard. When you have this kind of transaction, this is where you should go. Okay, because sometimes it depends also on your business. Okay, the nature of the business. Perhaps for certain business, that category of transaction would be recognized as an expenses, but for your business, that category of as transactions should be recognized as an asset. Okay, so it is actually go back to your interpretation. How does it apply within your context? Okay, so this is where at the first level judgment is actually being applied. Okay, so the same thing happened with the auditor, because when you go and ask the client, okay, because you are checking, right? Okay, you are checking whether the transactions that being taken up by the client is actually being recorded properly in the proper classification of the accounts, and then the proper value has been used as a measurement, right? So you actually judging that the judgment that being applied by the accountant is actually reliable, okay, is actually applicable, and is actually correct, okay? Because sometimes it depends on individual interpretation, okay, their experience, their exposure, and so on. All right, but of course, when it comes to the presentation and disclosure, most of the time, this is already being guided, okay, by the financial reporting standards. So most of the time, the one that highly applicable in terms of the judgment is at the point of recognition and also at the point of measurement. Okay, and then as an auditor, when we do the audit, we have a lot of assumptions that we need to determine. Okay, because for instance, if you remember when you do the completion, audit completion, okay, you're actually assessing the going concern status of the company, because if you recall in your audit fundamental under ISA 700, it's already been mentioned. Apart from key audit matters, you also have to assess the going concern status of the company. So you have to assess, okay, you given these particular facts about the company, they have making loss, okay, their cash flow is like this, and then their liability is like this, and so on, so on. So based on that information, you as an auditor have to make judgment. Okay, how you are supposed to make judgment to your best level of judgment. What decisions can you make? What opinion can you give? Okay, because sometimes perhaps the company can survive. Okay, but then you decide that they are not actually sustainable. So you give them going concern status. Okay, so that's why when you make your judgment, okay, it apply a lot of things. Okay, it's actually apply your experience, it's also apply your independence. Okay, because sometimes these two elements, okay, would have an influence on your judgment. Okay, because sometimes when you are being pressured to give certain kind of decisions, hence you will not make a good judgment. Okay, it might be end up into a biased judgment. Okay, and then another area where a lot of assumptions being applied in the audit is the accruals. Okay, accruals is where, remember, you have provisions and accrual inside the trade payables. You have trade payables, you have other payables, you have accruals, and also provisions. Okay, provisions is the one that very much applied for judgment, because when you want to provide something, okay, you must have a basis, and this basis sometimes is not strongly being supported by the client. Okay, so how you determine that the assumptions that being used by the client to provide that amount is actually applicable or reliable? Okay, because at the same time when we do the audit, okay, we also have maturity level as a benchmark for us to decide. Okay, because sometimes, because it's also judgment, right? When we decide our maturity level, oh, we think that 5,000 is the best as a maturity level, or perhaps 10,000 is the best. Okay, because sometimes you just take certain percentage, you multiply against your profit before tax, and you come out that as your benchmark. Okay, so in other words, what I'm trying to say is that in audit, there's not a lot of things that which is very objective, clear cut. If this is as such, then this is what we do. No, okay, there's a lot of plenty of judgment. So as an auditor, okay, as an auditor, how do we apply our judgment? Okay, so why is actually judgment is important? Okay, because we are evaluating the financial statements of the company. Okay, because at the end of the day, we want to ensure that the financial statement is useful, meaning it can be comparable. Okay, from one company to another company, it is comparable within the same industry. Okay, we also want to ensure that it is timeliness. Okay, remember just now when we're talking about measurement, some measurement are using historical cost, some measurement are using market value. Okay, but in certain company, they're using for assets is all market value. So how you want to make it as a comparable? Okay, because you don't want to talk about, you want to making decisions, but you're actually based on certain that is already obsolete. Okay. And then in fact, when we're talking about valuation, are we the best person to estimate what is the best value for that particular item? Because we are not in that industry, okay? So perhaps we have some limitation in terms of our understanding of the industry knowledge. Sorry. And then another thing is that we want also to ensure that the presentation is, the financial reporting is actually presenting faithful information. Okay, that means everything is actually complete. Okay, I mean the whole information that need to be presented, to be disclosed, has already been disclosed properly inside the financial statement in the segment of the disclosure. And then we also want to ensure that everything is actually free of errors, okay, and everything is free from bias and so on. So As an auditor, we also have limitation because when we do the audit, we are actually not checking the whole population. We are doing certain sample. Okay, so that's why when we do the audit, okay, our judgment are also limited to certain extent, okay, because we do have some constraint. Okay, we actually not checking on the whole, every single transaction, everything that happened during that particular financial year end. Okay, so that's why uh, judgment is actually very important. So, what is actually professional judgment? So, professional judgment is actually a process of reaching decision. So, you are making decision. Okay, so when you make your decision, you are based on what? Okay, of course, when we make our decision, it must be an informed decision. Okay, so how do we know that we have already gathered adequate information, okay, for us to make decision, especially nowadays in the data analytics. Okay, last time in the traditional or manual audit, we are actually rely on the samples that we do. Okay, based on the perhaps 20 samples, we make conclusion for 1,000 transactions. Okay, but now with the analytics, perhaps you do testing on the whole 1,000 transactions. Okay, how do we reach to that particular decision? Which one is more reliable? Okay, so that kind of arguments actually happen nowadays. Because normally professional judgment, F is actually function. Function of professional judgment, meaning in order to make judgment, okay, what actually influence our judgment? Number one is our cognitive, okay, our thinking process. All right, our processing mode. Are we the one that actually making a very quick kind of decision person, okay, without actually considering a lot of information that we just cut certain information, we just focus on certain information. Okay, our processing mode, they call it. Okay, and then do we also rely on our job training? It means that our experience, because when we involve in the job, we get exposure, okay, of issues or risks of about a particular industry, about particular company, and so on. So that would also help us. Okay, experience would definitely help us about making a good judgment as well. Okay, and apart from that, also knowledge. Okay, knowledge means that what do we know about the things that we need to make the decision. Okay, like just now I mentioned, we as an auditor, we might not be the expert. Okay, so let's say we want to do the valuation for the diamond. Okay, diamond for we are doing the audit of the gold company. How do we know this kind of diamond compared to another piece of diamond is actually different valuation? Okay, so because we don't have knowledge, all right, about the cut, about the shining, about the characteristic of the diamond, that means which one is high value, which one is actually low value. Okay, so that's why there are some limitation when we make our judgment. But to the best level, what is the best judgment that we can make? So that's why we need to acquire a certain level of knowledge to make a good judgment as an audit. Okay, cultural also influence. Culture means that the thinking, because it would actually develop your thinking process, okay, your values, right? Whenever you make your judgment. The same thing with the tone at the top. The tone at the top is your leadership style, okay? What kind of management style that being practiced in your company? If let's say you are within the kind of like very strict kind of environment, perhaps your judgment would be very strict. But if let's say you are in the situation whereby the management style, okay, the values, the culture is actually being very flexible, okay, very appreciate and so on. So perhaps you are also tend to be in that kind of mode when you make your judgment. Okay, so our surrounding is also uh, able to influence how we are actually making our judgment. Okay, so what are the threats to the judgment? Number one is time constraint. Why time is constraint? Because when we have limited time as an auditor, we cannot perform alternative procedures. Hence, perhaps we just making judgment based on whatever procedures that we are able to do. Okay, because in audit, sometimes we do have this testing, but subsequently we do have, we call it alternative procedures. Okay, just to confirm the audit objective is actually achieved, okay, fulfilled and so on. Right, so the time constraint would able to limit your good judgment, because your ability to perform more, okay, as compared to when you have more time. And then limited capacity, okay, because why? Because everyone, okay, have a different kind of mental level, okay. Your mentality, your processing mode, your skill, your knowledge is all different from one person to another person. Okay, so those are always limitation. And then of course the third one is the bias, but this one you can control, right? Because it's actually your mindset, okay, your mindset. How do you handle influence? How do you handle pressure? Okay, how you practice your professionalism. Okay, so if you are able to practice your professionalism, so given in the stressful decision, okay, pressured decision, you are able to set aside the bias, and also reduce or avoid any self-interest kind of conditions. Okay, so in other words, whatever it is, as an auditor, whenever you make your judgment, try to focus on what you will need to do. Make sure you have an informed decision, all right, and avoid all the pressures. Okay, how you handle your professionalism. Okay, so that is judgment. What is professional skepticism? Different, skepticism and judgment. Okay, skepticism means you practice skeptical. Okay, how you want to be very skeptical? Actually, uh, is from the job training, automatically you will be trained to be very critical in analyzing or evaluating whatever that given to you. Okay, because as an auditor, you gather evidence. Okay, you gather evidence. Your evidence can be in the form of corroboration given by the client through your inquiry. Okay, it can also be in the form of documents. All right, and then documents sometimes can be photocopied, can be original, right? Because nowadays when you audit, sometimes you use digital document. So how you critically analyze, okay, that particular evidence that being given to you. Okay, so basically skepticism asks you to always ask question in your mind. Okay, means that why should I use this? Okay, why do I need to look at this document? Okay, does it actually sufficient to use this particular document? Is that a contradict kind of evidence, actually contradict to what you are trying to testing? Okay, or you are also questioning about the authenticity, because nowadays with the digital, with the technology, a lot of fake document can easily be produced, right? So how you critically analyze, okay, assess the ingenuity and also the integrity of the person, especially when you get the you do the inquiry with the clients and so on. Okay, so it's not to say that you perceive everything is bad, everything is not good, but it's just that uh, you are like, why if you come across a small kids, sometimes when you say this is why the bird fly, why you eat like that, why you need, they always keep asking the why question. Okay, so skeptical is actually like that. Okay, you're actually asking why. Okay, any question? Alright, tak ada question? Kalau tak ada question, I have the question for you. So you go and get the question from the WhatsApp. I already shared in the group.
Madam.
Yep.
We couldn't hear you just now.
Madam.
The whole thing or what?
I think starting from you were explaining about kids keep on asking the question why.
Skepticism
Yes.
Okay. Kejap Tak ada pula come out tu. Okay. This part covered, dengar tak tadi? Ke from this part?
That part, madam.
This part tak dengar Okay. Alright. Okay, skepticism is actually an attitude. Okay, macam judgment just now is where you making decision. Okay, but in order to make decision, you have the attitude of asking the why question. Okay, are you making the right decision? All right, are you making the right opinion? All right, so that is one thing when you how you apply skepticism. Means how to be skeptical. Another way of how to be skeptical is that when especially when you are dealing with the evidence, okay, because auditors, their job is to gather evidence, and then from the evidence you make your conclusion. Okay, because remember when you audit, let's say you audit account receivable, that means you are testing the account receivable is properly valued, it is actually complete, it is actually in existence, etc. etc. It means you are confirming the audit objective. Okay, so so in order to conclude that everything is actually in order, you are gathering evidence. Okay, so when you gather evidence, the thing that you must do is to question the reliability and integrity of the evidence, because your evidence can be in many forms. Okay, first thing, you might inquire your client. Okay, then your client will explain, give a corroborating evidence to support whatever that you are actually asking. So the one that been given by client, the explanation that been given by client is actually can be considered as an evidence, because most of the time some of the facts are being quoted in your working paper. Okay, so you yourself have to put in your mind, is that what is being said by the client is actually correct? Okay, is it acceptable? Is it right? Okay, so you have that kind of mindset. Okay, you are questioning. It's not that you are not trusting every people, okay, everyone and so on. It's just that you are questioning the integrity of the evidence, all right, the explanation given by the client. And then when you are given the evidence, okay, nowadays, last time when you do audit, because before pandemic, you can go to client's office, okay, you can go to see the hard copy evidence, or in fact, if it is not even a hard copy, soft copy, you actually can enter into the system of the client, okay. All right, so you at least you can actually have certain sense of trust. Okay, you have do some testing. All right, these evidence are actually reliable. Okay, but now during the pandemic, what happened is that you are doing the audit at your home or perhaps at your office, and the clients only email you, give you in the digital form. So you definitely will be questioned, right? Because you will not know, okay, is that document is actually original document? Is it actually the fake document? Right? Is it actually, because nowadays with the digital and technology, everything can be modified, right? Okay, if there is no sign, then you can put the sign. Okay, so you have to question, is this the correct document? Okay, is it the acceptable document? So that is actually the skepticism that you have to apply. Okay, so it's in many cases, it is actually applied in assessing evidence. Okay, so as an auditor, you are doing the audit for like 3 different phases. Okay, during the planning, during the field work, and reporting. So during the planning, you already applied your skepticism. Okay, meaning that your planning is actually where you remember when you ask about the business. Okay, client explain to you and so on. So from there you can start actually doing your question in mind. Okay, they do that kind of operation, they do that kind of process. So you start questioning yourself, is it the right operation or is it the right process that clients are doing? Is it the right way of to manage the risk by using that kind of control procedures? So you are questioning the accuracy, okay, the acceptability, all right, the reliability of the process that being explained by the client. Okay, so you have to put yourself in that situation, okay, when you apply your planning. At the same time, when you actually talking to the management, you have to assess, right, the management. So you are starting to look at the body language, okay, how they answer your question, and then you start because you are assessing their integrity. Okay, you are assessing the risk from the management staff. All right, so you are doing observation. So from that, you have to question. Is that person is okay for me to rely on whatever the facts that given by him or her? Okay, so you are doing that. Okay, actually, in fact, I mean, it's not like, okay, I have to it's not like when, okay, now I have to apply skepticism. No, it's like automatic, you are doing that, okay, in the audit. And then during the field work, definitely, okay, because field work you get the evidence, right? So evidence can be in the form of hard copy, digital. You are also getting evidence from the explanation from the clients. That is where you start doing your questioning mind. Okay, critically assess whatever facts given to you, whatever documents given to you is actually highly is really reliable, okay, and integrity is something like a reliable kind of a document to be relied on, and then it is actually sufficient, because sometimes you have this is where the integration with the skepticism and judgment, because you want to ensure is it adequate or not. You are also making judgment, okay, by having this kind of evidence, is it adequate, okay, so that kind of things, okay, that you need to exercise. And definitely, finally, in the reporting, okay, as a whole, normally partner will come up with their audit opinion, okay, conclusion about the whole financial statement. So this one normally would be done by the partner. Okay, so partner, they have to apply high level of judgment, okay, high level of skepticism. That means they have to be skeptical given these issues, given this kind of client, given this kind of management. Okay, is it okay for them to accept this kind of audit opinion? Okay, but you are also doing the same thing. Remember, when you're doing the audit of a particular section, let's say you audit inventory, okay, or let's say you audit what's this account receivable. So every single sections you have to make conclusion, right? Okay, or even every single audit working paper, so you have to make conclusion. Let's say you have performed look at verified or 20 samples to conclude on the population of 1,000 transactions. Okay, so you are already making judgment there. You have to be critical. Do I do the evidence from the whole 20 evidence samples just now is actually sufficient to conclude that there is no exception in that particular 1,000 transactions. Okay, because we never know, the one that samples that we pick up is all the good one, but the rest with the problem is the one not being detected in the samples. Okay, so this is where you have to be very skeptical. Okay, that means it's not that we don't trust people. Okay, we don't trust everything that being given by the people. It's just that you just question, try to question, is it the right thing or is it the right document and so on. Okay, because sometimes because the skill is actually coming along from the on the job training. Okay, it's not like you've been taught, okay, this is okay, now you have to apply skepticism, now you have to apply judgment. No, it's like automatic that you're going to apply that, okay, during the course of the audit. Okay, so these two are the two important thing that normally auditors need to apply. Okay, judgment and also skepticism. All right, whenever you are dealing with the situation where you have to make look at the evidence. Okay, and judgment normally involve when you are making decisions in the very tough situation, for instance, that apply something which is not objective. Okay, something that is very subjective. For instance, like when you are making a judgment on the adequacy of the provisions, all right, whether the basis of assumptions that given by the client is actually adequate, correct, okay, complete, all right, is it relevant to the financial reporting standards and so on. Okay, because if you realize nowadays, financial reporting standard, of course, a lot of things has been revised, financial reporting standard, but it's also open up for more judgment to be applied. Okay, a lot of context. The most obvious one is that we are talking about impairment fair value. Okay, because we are talking about the right value, right, that should be appeared on the financial statement. We should no longer talking about historical cost, because now we are talking about timeliness. We want to know the current status or position of the company. If we are using historical cost, it might be obsolete. Okay, so that kind of argument, all right? And then of course, judgment made by one accountant to another accountant is different. Okay, because different accountant would have different knowledge and also different experience. So that's why it's like open up for more discussion or perhaps sometimes argument. So how you are dealing with that. Okay, so that is actually what auditors are normally facing in the course of the audit. Okay, when you are dealing with the clients, or even sometimes where you're dealing with the what's this client, and also sometimes even among your team member as well. Okay, all right, so that is what you have to learn how to apply the skill, okay, of making good judgment, because that is where as an auditor you have your feeling of comfort and also instinct whether the judgment that you make is actually not to say 100% accurate, but at least give you some comfort you are actually making the right judgment. Okay, so that is how we as an auditors apply judgment and skepticism in the audit process. Okay, all right.